Hello everybody, I'm Gary Massa with Massa & Associates here at Pacific Sotheby's International Realty, and I'm here with my main man, Mike Campos with San Diego Funding. You know, I'm getting ready for the open house tomorrow with this new listing. I asked Mike to stop by and take a look at it, and we started talking about some new and really interesting financing programs that are available to buy a property. This one's actually listed at $1,550,000, and I was so blown away. I wanted to share it with you. So Mike, would you tell me a little bit about what we're talking about, some of these new loan programs?
Yeah, thanks, Gary. Since 2017, the banks have been feeling really confident about the strength of the real estate market nationally. Especially here in San Diego with low inventories, a growing stock market. They just feel really confident that it's a safe investment for them to lend money to us as homeowners and home buyers here in San Diego.
Loosening up regulations, right?
Absolutely. So we've had a lot of portfolio loans come out that offers a lot of outside the box type thinking.
Okay, great.
And
we like
so
that.
this fancy board sheet here I brought to kind of break down some of the options for this property.
Right, and help you understand, you know, what is available and what that actually means to you as a borrower.
So, you know, if you're active duty military or a veteran, we have VA financing up to $2 million loan amount.
Wow.
100% financing for those types of military up to $649,500. The wonderful part, if this condo complex was VA approved,
that's right.
It could be about a 14% down payment at the best rates with no private mortgage insurance for veteran or active duty.
Wow, that's awesome.
But
okay.
We do have a lot of other great solutions for this price point, including a 5% down payment,
wow,
40-year fixed loan with the first 10 years interest only.
Okay.
And then from there, we also have some traditional loan programs in that 10% down arena, where it's called an 80-10-10. And in essence, what that means is that you have a 10% down payment, a 10% second mortgage, and an 80% first mortgage, totaling 10% down payment, 2 loans.
Wow.
From there, we have no PMI, 30-year fixed, and we also have that wonderful 40-year fixed interest only as well.
Okay, Mike, before we go any further, I think we need to explain a little bit about what the 40-year fixed is,
right,
and how that actually benefits home ownership and maybe makes that property more attainable.
Right. So in traditional underwriting guidelines, an interest-only loan has a 30-year lifespan, a 30-year term. And the first 10 years is interest-only, meaning the remaining term is 20 years. So underwriters underwrite a traditional interest-only loan on a 20-year amortization.
Meaning that payment's going to be a lot higher.
A lot higher, harder to get the loan approved.
Okay.
With our 40-year fixed loan, the first 10 years is interest-only, meaning the remaining 30 years is principal and interest, stretching out the debt, reducing the payment, the qualifying payment, making it easier for home buyers to get an interest-only loan.
And then when it resets, it's still a 30-year fixed loan over the payment that you qualified for in the first place.
Right, okay, right. So by utilizing a 40-year term interest-only loan, in some cases, the interest-only payment is going to be a little higher because you're borrowing more money. But because we're doing a 40-year term, some people on $1 million loan size can finance $200,000 more and qualify for that loan. So for example, on a 30-year qualification, a customer might be able to only be approved for $1 million loan, but on a 40-year qualification, they can finance 1.2.
Okay.
Allowing for more buying power for our clients.
That's $250,000 more in buying power to kind of help get some of those properties, like being down by the beach, something a little luxury, and maybe a second home, something like that. Right?
Exactly. Okay. So it's a really aggressive product, but it's safe because it is fixed for 40 years. So a customer knows exactly what they're going to get into and what they're going to get out of as well.
Okay, awesome. Sorry to
it's
cut
all right.
you off on that.
It's great.
Thank you.
And then from there, we also have 15% and 20% down payment loans.
Okay.
When we step into these 15% down payment and 20%, we then step into the more traditional financing, 30-year fixed, 15, 20-year fixed, 7/1 ARM,
right,
interest only as well. But also that 40-year fixed option, interest only, carries over to all down payment amounts.
Oh, wow.
So the menu gets longer and longer as the down payment increases. But when we get to this 20% mark, 25% mark.
And Mike, sorry to cut you off one more time. I keep seeing no PMI on here, and I think that's important to actually, break down really quickly for the viewers because, traditionally when you did less than 20% down, you had the private mortgage insurance, which is an additional cost, which raises your payment. And so now
in this jumbo loan arena, when we finance more than $649,000 on one unit in San Diego, there is no PMI.
Okay, that's
so
awesome.
Sometimes it's included in the rate, or sometimes we avoid PMI by splitting the debt up into a two mortgage situation.
Okay.
So really aggressive terms.
Keeping those payments down and not having to pay, excruciating costs or costs that don't make a whole lot of sense to us as homeowners.
In some ways we look at it is that, although the mortgage may be split into two loans, or although the interest rate might be a little higher to offset not having PMI, at least now your debt's going to principal and interest and accomplishing a goal, where PMI is not really helping you pay down your balance a little bit.
Exactly. So not a true benefit for us, right?
As consumers.
As homeowners.
Right.
Correct.
That's correct.
Okay. Sorry, go ahead with the 20% down.
And my last bucket is the 20% down or more bucket. And this is where we get to have all the traditional loans as mentioned and that 40-year fix. But in addition to, we have some really unique cross-collateralization, departure rental income type loans that is in this portfolio loan arena.
Okay.
And so this down payment amount allows us to collateralize the equity of a move-out house in lieu of a down payment on the purchase property in case the client needs to purchase and close escrow on the new property before they sell their departure home.
Okay.
So a really great solution in this very aggressive market that we're in right now.
So in a simplified term, it's basically wrapping those two homes into one loan, you know what I mean, and allowing them to qualify for that one payment instead of trying to qualify for two houses.
That's correct. Right? That's correct. And also another strategy that's very similar to that is where we utilize an appraisal on the departure home to identify what the market rents of that departure home is, and then utilize a percentage of that market rent on the application as income to help a home buyer qualify carrying two loans at the same time.
Okay.
So if a client had the down payment of 20% or greater on the new property, yet might not qualify carrying two mortgage notes at the same time, utilizing the departure rental income mortgage program allows us to add projected rents onto the application to help them get their loan approved.
Okay, so two questions.
Sure.
Does that program offer to all price points, not just 1.5 or multi-million? Would that be offered to maybe a purchase at $1 million or $900,000, something of that nature?
Yeah, that's available on almost every price point. There are very specific rules to making that loan program work, including that the departure home cannot be listed for sale. Lots of other criteria involved in regards to that, but I am available to consult you by phone or email to help identify if any of these programs might fit for your clients.
And Mike, last question, would that cross-collateralization loan work for like buying a second home? Like if somebody has a lot of equity in their primary residence, could they wrap them both together with a purchase of a second home such as this?
I hate to tell you no, Gary.
That's okay. That's why we ask questions. Okay.
This is designed for primary residence transactions only.
Okay.
So in essence, if you have a current primary residence that you live in today, you fell in love with a new property that's going to be your primary residence, and there was no time to list and sell your current home first,
okay,
then this cross-collateralization loan will help you move into your next primary residence, and then after close of escrow on the new primary residence, you can eventually sell your departure home.
Which is still solving the biggest problem in real estate right now is how do we get to here in such a tight competitive market without doing a contingent sale. So,
that's right.
Mike, again, incredible information. I hope you guys got some value out of that. Again, if you want to get more information, obviously everybody's situation is specific and they need to get the details. So definitely message below, call Mike directly, call me directly. Thanks again for chiming in. Mike, anything else?
That's it, man.
Thank you, sir. Have a great day.
You got it.